I'm the wolf of Dubai. Now I know, you might not know me. That's true about for the 62.7% anyway. And therefore, I'm going into the most asked question right now. Who's this guy and why he don't put the money where his mouth is? Well, I already done that. I bought Amazon stock, 14 pieces to be exact, and I bought them a couple of days ago already, so I'm a little bit up on them. But let's deep dive into Amazon stock. You must think now, well, this is not the usual vlog that you see on this channel. Well, I thought after a year on YouTube and 5,000 subscribers, thank you very much, we are going a little bit more dynamic because the vlogs that you saw so far are a little bit of static, right? This is like the trend in the whole YouTube finance industry. Now I thought let's spice it a little bit up. So I bought a fancy camera, I showed my cat how to use it, and now here we are. And therefore let's dive into Amazon and the core business of this huge company, which is e-commerce. Think about first your own consumer behavior. In this whole, let's say, difficult situation, did you or did you not order more at Amazon? Well, let me guess, you did. And now is your question, did I just bought this Amazon package just for the vlog? Absolutely yes. Well, and did Amazon profit from that? Of course. But Amazon is much more than just a delivery service. They are huge, guys. This is one of the biggest companies in the world. And their warehouses are absolutely insane. There are robotics, there are thousands, hundreds of thousands of people working, and even the demand was so great and high that they had to bring 175,000 more people in. That's almost twice the biggest football stadium in the world. Now, but obviously you don't have to believe myself, so let's have a look what the analysts are currently saying. The analyst, or the earnings whisper number, which is, let's say, the closest what you can get into the whole summary of what experts are thinking will happen to the stock of Amazon, we have a 6.84 earnings per share and also a consensus of $6.31 per share. However, the revenue shall be somewhere at 73.42 billion, and we have the earnings today. But let's have a look. What does it actually mean? Now, we are at those levels in terms of Google Trends, which I love to look up because you have a slightly look how those companies are really doing if you see the spike into their search. So based on that, if we are looking into those Google Trends, you see that the current pensum that is currently on is not only longer than the usual Christmas time, but it's also almost that high as the quarter of the Christmas time, which is the biggest quarter always for Amazon. And let's have a look how much we did last Christmas quarter. So last quarter earnings per share was 6.47 versus expected 3.98. This was a 62. Hands down surprise, guys. But not only that. As per quarter earnings release of Q4 2019, so the last quarter, we were up 21% to $87.4 billion revenue. Okay, so we are almost in the Christmas season at $90 billion, okay? And we saw by the graph of Google Trends that we very much scratching on this trends, and even it's more long lasting. So if we adjust a little bit more at the $80 billion revenue mark, then we will beat the earnings revenue forecast by more than 10%, guys. But if all of this would be just e-commerce, Amazon is so much more. Let's have a look into the cloud business of AWS. This is the cloud business that Amazon is basically the backbone of the internet. Now, if you like Netflix, Twitch, you like also LinkedIn, maybe you like also Facebook, maybe also BBC or Baidu or ESPN or Adobe or Twitter. Now, those are just a couple of Amazon clients. So you can see if all those services and companies have just a huge run on their services, who will benefit from that? It's the Amazonian. So if you're an Amazonian investor, you will profit and see a huge surge. Last year, we had 30% surge in AWS. This will be crushed this earnings. So guys, do you really want to bet against the backbone of the internet? Yeah, me neither. So think about it. The huge e-commerce and also Whole Foods, because remember last quarter they purchased Whole Foods, and foods is something that is selling very well right now, was bought by Amazon. And Amazon bought this company to extend their food business outside the e-commerce that they had already. And this $13 billion acquisition could now bring some really interesting revenue to this e-commerce space. But we talked about e-commerce, and let's talk about the cloud. The cloud is so much more than just storage. It's solutions for companies, for people that going online. And nowadays, everybody's going online. So I think that both together is a huge advantage for the Amazon stock tip. As this wouldn't be enough, there is a third superstar that is maybe making a little bit better than the whole competition out there. Now, advertising. Amazon has a huge advertising because everybody using Amazon search to look for products. And then they came to the idea that it would be maybe crazy good if we are selling ads on our platform, so e-commerce companies could really do those work on those ads. And now you might think, well, the advertising business is really going slow in this kind of timings, but you are right. But think about Amazon. The e-commerce business is booming, and therefore the correlated ads on these platforms is booming as well, right? If you're putting one to one together, it seems that Amazon ads is not that much affected like we might think, and also some Amazon analysts are thinking, because in the end of the day, these analysts are just people like you and me, and they have like thousands or hundreds of stocks that they look into, and they don't have the time like us ordinary investors to look very, very deeply into one stock and those data only. Cheers. Now, this is not alcohol. I never drink alcohol in my life. Now, this is a lie. Maybe the same lie that you are telling yourself that the Amazon stock is too expensive. Now, this is maybe one of the biggest reasons why people don't get into the stock. The stock is currently hovering somewhere at around 2,300 levels, which I agree is a little bunch of dollars. Now, I am telling you that Amazon is not expensive. Now let's have a look into the PE ratio. The PE ratio is actually somewhere around 100, which is approximately well under those 2016, 15, 17 levels, because we having just more and more revenue and better earnings on the stock, and therefore the PE ratio will be more down, even though if we have a really heavy earnings, then this PE ratio would further drop. Now the same is for the PS ratio. The PS ratio is the price sales ratio, so also a very important metric if you want to compare or say if the stock is expensive. Now looking into the PS ratio, we are seeing that we are somewhere around 4.15, which is also less than about 2 years ago, where we still were at 4.5. Now, so overall, I'm not agreeing that the Amazon stock is too expensive right now, even though we have all-time highs. Also remember, guys, as longer this whole situation is in duration, as longer we have a benefiting Amazon, because in the end of the day, we see that the current situation is pushing the digitalization worldwide and in all industries. And for those who are coming out of their corners right now and saying, hey, what are you doing if Amazon go down on earnings? Well, I will buy more, motherfucker. After this amazing vlog, let me have a look if everyone consider it now. Would you rather buy Amazon stock or Tesla stock?
It's okay.